Let's get real about insurance. Most people think it's just another bill or something you only need when you buy a car or a house, but it's so much more than that. Insurance isn't just about your car or your house. It's about protecting your entire way of life and the things you've worked so hard to build. Property and Casualty Insurance, or P&C, is your financial shield. It stands between you and the unexpected, disasters, accidents, even lawsuits, so you don't have to face them alone or risk losing everything. Property insurance covers your stuff, your home, your car, electronics, jewelry, and all the valuable things that make your life comfortable. It's about more than just the big things. It's about the little things that matter too. If disaster strikes, property insurance helps you rebuild and replace what's lost, so you're not left paying out of pocket or starting over from scratch. It gives you the power to recover and move forward. Casualty or liability insurance is what steps in if you're responsible for injuring someone or damaging their property. It covers legal fees, medical bills, and settlements, so one mistake doesn't ruin your financial future. Imagine causing a car accident with huge medical bills. Liability coverage keeps you from losing your savings, your home, or even your future earnings. It's peace of mind for life's what-ifs. P&C isn't just a bill. It's essential protection for your assets, your family, and your future. It's a safety net that lets you focus on living, not worrying. It's about safeguarding the life you've built, the memories you've made, and the dreams you're still working toward. Don't think small. Think total financial protection. P&C insurance is about seeing the big picture and making sure you're covered from every angle. Without it, one accident or disaster could wipe you out financially, leaving you and your loved ones vulnerable. P&C is the structure that keeps you safe, the invisible barrier that stands strong when life gets unpredictable. Don't risk everything by ignoring it. Make sure you and your family are truly protected, no matter what comes your way. When you file an insurance claim, have you ever wondered who actually receives the money? It's a crucial question, and the answer depends on the type of coverage you have. This is where the difference between first-party and third-party coverage comes in. Understanding this distinction can help you make smarter choices about your insurance. First-party coverage is all about protecting you, the policyholder. It pays you directly for your own losses, like when a storm damages your roof or your laptop is stolen from your home. You're the one who gets compensated. For example, if a fire breaks out and damages your kitchen, your homeowner's insurance steps in. It pays you so you can repair and replace what's lost, helping you get your life back to normal. The same principle applies to your car. If you have collision coverage and your vehicle is damaged in an accident, your insurance pays you to fix it, regardless of who is at fault. Third-party coverage, on the other hand, is all about liability. It protects you when you're responsible for someone else's injuries or property damage. Instead of paying you, it pays the other person who suffered a loss. For instance, if you cause a car accident, your liability coverage pays for the other driver's medical bills and car repairs. The money goes directly to them, not to you. You won't see this money yourself, but it's there to protect you from lawsuits and major financial setbacks. It's a safety net that keeps you from having to pay out of pocket. Remember, first-party coverage means your stuff, your payout. It's about making you whole after a loss. Third-party coverage means their loss, their payout. It's about protecting others, and in turn, protecting yourself from legal and financial trouble. Knowing the difference is key to being a smart insurance consumer. It helps you choose the right policies and understand what's covered in every situation. Don't mix them up. Review your policies and know exactly what each one covers, so you're never caught off guard. First-party coverage helps you recover from losses, while third-party coverage shields you from financial disaster if you're held responsible for someone else's damages. Both types are essential for complete protection. By understanding how each works, you can make sure you and your loved ones stay protected, no matter what life throws your way. Your homeowner's policy is actually 6 coverages in one. Coverage A, dwelling, protects your house's structure. Insure for rebuild cost, not market value. Coverage B, other structures, covers detached garages, sheds, fences, usually 10% of your dwelling coverage. Coverage C, personal property, your belongings, typically 50-70% of dwelling coverage. Make a home inventory. Coverage D, loss of use, pays for hotel or rental if your home is unlivable after a disaster. Coverage E, personal liability, protects you if someone sues after being hurt on your property or by your actions. Get at least $300,000, ideally $500,000. Coverage F. Medical payments. Small, no-fault coverage for minor injuries to guests. Each pillar covers a different risk. Know your limits and what's included. Don't guess. Review your policy. These coverages work together to protect your home, your stuff, and your finances. Missing one leaves you exposed. Understand each pillar. That's real protection. State minimum auto insurance is a financial trap. Those limits were set decades ago and are way too low for today's costs. If you cause a serious accident, medical bills and car repairs can easily exceed those minimums. When that happens, you're on the hook for the rest. Your savings, home, and wages are at risk. Being legal isn't the same as being protected. State minimums give a false sense of security. Modern cars are expensive. A small accident can cost thousands. Don't gamble with your future to save a few bucks. Minimum coverage is not enough. Protect yourself with higher limits. To truly protect yourself, build your auto insurance like a fortress. Start with liability coverage, at least $250,000 per person, $500,000 per accident for bodily injury, and $100,000 for property damage. Next, add uninsured underinsured motorist coverage, same limits as your liability. 1 in 8 drivers has no insurance. Protect your car with collision and comprehensive coverage. These pay for repairs after accidents, theft, or disasters. Choose a deductible you can afford. If you have a loan or lease, these are required. Add medical payments or personal injury protection for immediate medical expenses. At least $5,000 is smart. Got a new car? Get gap insurance. It pays off your loan if your car is totaled and worth less than you owe. Don't skip these layers. Each one fills a gap. Build your policy for real peace of mind. Don't settle for less. Drive protected. Once your home and auto policies are strong, add a personal umbrella policy for ultimate protection. Umbrella insurance gives you extra liability coverage, usually $1 million or more, on top of your existing limits. If a lawsuit exceeds your auto or home policy, the umbrella kicks in and covers the rest. It's not just for the wealthy. Anyone with assets or future income needs it. Example, you cause a major accident, owe $1.5 million, but your auto policy only covers $500,000. Umbrella pays the extra $1 million. It also covers things like libel, slander, and some volunteer activities. Follows you worldwide, even on vacation. Costs about $200–400 a year for $1 million in coverage. Insurers require high base limits first, usually $500,000 auto, $300,000 home. This is the final piece for bulletproof protection. If you have assets, you need an umbrella policy. Standard homeowners insurance is a great start, but it has some serious gaps. Don't ignore them if you want real peace of mind. Many homeowners are surprised to learn what isn't covered until it's too late. First, flood insurance. Homeowners' policies never cover flood damage, even if you live in a moderate risk area. Floods can happen almost anywhere, and just a few inches of water can cause thousands in damage. Buy a separate flood policy if you're at risk, and check your flood zone status regularly, as it can change over time. Second, earthquake insurance, also excluded from standard policies. Earthquakes strike without warning and can devastate your home and finances. If you're in a quake zone, get this coverage or risk total loss. Retrofitting your home can help, but insurance is your financial safety net. Third, valuables. Jewelry, art, and collectibles have low limits under most policies, often just a few $1,000s. I can ender at a basing saldeskin sa skanen sa ein zeker jewelers scholar, sommer der prander. By the Dachshund property endorsement for full coverage so your prized possessions are protected at their true value. Fourth, cyber insurance protects against identity theft, cyberbullying, and online fraud. As our lives move online, digital threats are growing. This coverage is increasingly important as we work, shop, and socialize online. It can help with recovery costs and peace of mind. Fifth, water backup. Standard policies don't cover sewer or sump pump backups, which can cause major damage and expensive repairs. Add this affordable endorsement to avoid huge cleanup bills and protect your home from unexpected messes. Each of these specialty coverages fills a critical gap that standard insurance leaves open. Review your risks, talk to your agent, and add what you need before disaster strikes. Don't wait for disaster to find out you're not covered. By then, it's too late to fill the gaps. Specialty coverages are essential for true protection and lasting peace of mind. Talk to your agent about these options today and make sure your coverage is complete. One gap can cost you everything. Don't leave your future to chance. Close them now. Personal insurance won't protect your business. Get the right commercial coverage. 3 essentials: business owner's policy, BOP, commercial auto, and workers' compensation. BOP bundles property insurance for your building, inventory, equipment, and general liability. If someone is hurt at your business or by your products. Commercial auto covers vehicles used for business. Personal auto won't pay for work accidents. Workers' compensation is required if you have employees. It pays for their injuries and protects you from lawsuits. Don't risk your business or personal finances by skipping these. Each policy covers a unique risk. Without them, one accident or lawsuit could destroy everything you've built. Review your business activities and make sure you're covered. Don't blur the line between personal and business use. Insurers will deny claims. Protect your business from day one. These are the foundation of business security. Don't wait until it's too late. Knowledge is useless without action, so here's your insurance checklist. First, check your liability limits. Auto should be at least $250,000, $500,000, $100,000. Home at least $500,000. If not, call your agent and raise them. Next, get a quote for a $1 million umbrella policy. Review your home's replacement cost. Make sure your dwelling coverage is enough to rebuild today. Add water backup coverage if you don't have it. For your car, confirm you have collision, comprehensive, and gap insurance if you have a loan or lease. Schedule valuables over $2,000. Don't rely on standard limits. Live in a flood or earthquake zone. Get quotes for those policies. Review your policies every year. Life changes, and so should your coverage. Don't just pay the bill. Know what you're paying for. Take these steps and move from passive to protected. Now go do it.